Welcome to the deep dive. We're the place where we really get into the weeds on complex topics, giving you the insights you need. Today, we're tackling something that's probably been on your radar if you follow decentralized finance at all. Those, well, dramatic price swings for AFX. I mean, a lot of you saw those huge fluctuations and probably thought, okay, is this it? Is this a crisis for AFX? And that's exactly what we're digging into. We've looked closely at the latest news from AFX, specifically their announcements from August 25th, 2025. Our mission today is to analyze all of that through a, let's say, strategic lens, like a DeFi expert would. We want to show you why maybe, just maybe, these changes aren't a crisis. Maybe they're actually a really smart pivotal move towards, growth and long-term value for AFX. So whether you're just dipping your toes into DeFi or you're a global investor watching every move, this deep dive should give you a clear strategic view. Okay, so let's get started. To understand the strategy, the why, we need to nail down the what's first. What exactly did AFEX announce back on August 25th? It sounds like some pretty fundamental shifts happened.
Yeah, that's the perfect place to start because these weren't just, minor tweaks. These were big foundational changes. AFEX rolled out 4 key updates, and each one seems carefully designed to push the platform more towards real decentralization and boost its actual value. The first one, and maybe the biggest immediate impact, was getting rid of USDT staking. So before, you could stake USDT, earn rewards. Now, staking rewards only come from holding and staking the AFX token itself.
Wow, okay, that's bold. So let me get this straight. If you want the rewards now, you have to get and hold AFX tokens, no other way.
That's right. And the strategic effect there is pretty immediate. It's a direct way to basically engineer demand for AFX. By making AFX the only way to get those staking rewards, AFX is fundamentally linking user engagement, their success, directly to the health of the AFX token. It's not just about getting people to hold it. It's embedding AFX right into how the platform works, creates sustained buying pressure, locks in users who are committed. It makes the token essential. Then the second major update, they completely stopped USDT deposits and withdrawals directly on the AFX app. All those transactions, they've been moved. They're now exclusively on-chain, happening via PancakeSwap.
You're right, moving all that money stuff off their own app and onto a public DX like PancakeSwap. That feels like a major architectural choice.
Yeah.
What's the deeper meaning there, beyond just saying transparency, for security for the user?
It's a huge statement about trust and decentralization, really,
Yeah.
by moving those critical functions away from, what could be a centralized app environment.
Right, something they control directly.
Exactly. And putting it onto a public audited smart contract on a DX, AFEX is basically saying, look, don't just trust us blindly, verify it. Every single transaction can be checked on the blockchain. That massively boosts trust, especially for global investors who really care about verifiable security, not some black box operation. It maybe sacrifices a tiny bit of convenience, sure, but for total decentralization. Third thing, users now have to go directly to PancakeSwap to claim their staking rewards. It's not just clicking a button in the app anymore.
Okay, that definitely forces users into the deep end of DeFi, doesn't it? It makes them use DX directly, which I guess is good for decentralization. But couldn't that be a little bit more complicated for some people? Is it maybe a deliberate way to filter for users who are more DeFi native?
Oh, absolutely. It's deliberate and strategic. It does a few things at once. One, it educates users, right? Makes them learn basic DeFi stuff, become more self-reliant. 2, it anchors the platform even more firmly in that whole decentralized world. And 3, yeah, you're right. It probably does filter a bit, finding users who are actually comfortable interacting directly with the blockchain. It's a move towards building a stronger, more knowledgeable community that gets and values what decentralization is really about. And then the last piece, number 4, AFEX added the ability to link external gap wallets, think Trust Wallet, MetaMask, those kinds of things.
Ah, okay. That sounds like a big win for users having control over their own stuff. But, more control usually means more responsibility too, right? What are the main upsides, and maybe what do users need to be aware of with this self-custody model?
You nailed it. The benefit is huge. When your staking ends, your initial investment and your profit go straight into your personal wallet that you linked. That massively increases security because AFEX isn't holding it for you. You have total control over your assets. It's all yours. The responsibility, of course, is managing your own keys, your private keys. But look, for anyone serious about DeFi, that's kind of non-negotiable anyway, right? It's about real financial freedom. So yeah, these 4 updates together, they really paint a picture, a project totally overhauling its structure for a more decentralized, more robust future.
Okay, these are definitely big changes, really steering AFEX towards being more decentralized, but, and this is the big but for many people, this whole period also saw that, frankly, terrifying 90% price drop. I mean, that number just screams crisis to most people. Makes you think rug pull, platform collapse. How do you, looking at it strategically, connect these foundational updates with that kind of, well, brutal market reaction? What's the logic hiding there?
Right. And this is exactly where that strategic viewpoint becomes so important. It helps you cut through the noise, see the long-term signal. What we saw there, that dramatic drop, the 90%, strategists would call that a migration effect. It's not a rug pull. It's not a collapse in the way people might think. It's a direct consequence, and honestly, an expected one of a massive pool and system migration. Think about it like a giant tech company trying to rebuild its entire server infrastructure while keeping the lights on. There's going to be some temporary disruption, right? And in the DeFi world, with things like PancakeSwap, these automated market makers, when a project makes huge changes like this, the existing liquidity often has to be pulled out of the old system.
Out of the old pools.
Exactly. Pulled from the old pools to be put into new ones that match the new rules, the new tokenomics. And that temporary removal of liquidity, it creates a short-term vacuum. Volatility spikes. Slippage goes way up, and that shows up as a big price drop. I like to call this phase a liquidity reset. It's a necessary adjustment.
A liquidity reset. Okay, that term really helps visualize it. So it's not just about people selling the token, it's the actual market plumbing being rerouted, causing a temporary gap that hits the price.
Precisely. And the really clever part, the strategic part, is how the new AFX-only staking forces new liquidity to come into the new AFX-paired pools on PancakeSwap. People aren't just holding AFX to get rewards anymore. Now they have to actively put their AFX into these new decentralized pools to earn those rewards. They become liquidity providers. This completely re-anchors the token's value, makes it much more resilient, self-supporting. It's not just a tweak, it's a total redesign of how demand works, built for stronger, sustained interest in AFX.
That's a really interesting dynamic. It's almost like if a company stopped paying cash dividends and said, from now on, dividends are only paid in our own stock.
Right.
It forces people who want the reward to hold and value the stock itself, tying it directly to the company's success.
Exactly. That's a great analogy. It aligns incentives much better between the user and the platform's own asset, makes the token more useful, gives people a real stake in the ecosystem's success. And if we zoom out, this whole shift also massively cuts down centralized risk. AIFEEX moved how money flows away from just inside their app, which you could argue is a central point of control, maybe even failure.
Right, like one single point that could be attacked or go down.
Yeah, and moved it on to transparent DXs and smart contracts.
So the money isn't locked in one place they control. It's spread out, managed by code on the blockchain that nobody can just change. That's a massive boost for trust, surely.
It absolutely is. Huge boost in transparency, less central failure points. That's critical if you want to build deep trust, especially with big global investors. Institutional money. It shows they're really committed to true decentralization, not just talking about it like some projects do. And this isn't just about today. This foundational step is setting AFEX up for much wider adoption, long-term survival. I call this stage their phase DeFi transition. They're laying the groundwork, the essential foundation for potentially getting listed on major centralized exchanges, later CEX listings. And it even positions them for, well, broader financial integration down the line. Maybe not a traditional IPO like a stock company, but the crypto equivalent. Attracting serious institutional money, meeting tough regulations, operating with the kind of transparency and strength you see in public companies. This is all deliberate, strategic, evolution. It's about making AIFEX a mature, resilient, widely trusted player. They're thinking long-term, building real value. That's what makes them stand out.
Okay, so pulling all this together, what does it actually mean for you, the listener? Maybe you're thinking about investing or you're already holding AFX long-term. It's not just about knowing the what and why. It's about seeing the potential, right? The kind of opportunity a really sharp strategist would spot in this situation. What is the opportunity here?
Well, if you connect all these strategic dots, this current phase, the price swings, the system resetting itself, it actually looks like what I'd call a golden window for investors who get it. It's a specific moment in time. Not something to be scared of, but something to look at with strategic vision.
A golden window. Wow, that's definitely not what most people would think looking at that price chart. Why golden? What should someone be looking for if they see this window?
It's golden because for people thinking long term, this is a rare chance to potentially get tokens at a lower price during this big transition. The price is moving around because the system is literally finding its feet again under a new, stronger model. New liquidity is coming in. Users are adapting. That's not weakness. It's the market adjusting to a better reality. Like, when a growing company restructures, the stock might dip temporarily before it takes off again. So what to watch for? Watch for liquidity building up in those new AFX pools on PancakeSwap. Watch for people steadily adopting the new staking system, because once that new system is running smoothly, once liquidity properly flows back into those new decentralized pools, there's a very strong rationale based on these new tokenomics to expect the price could bounce back significantly and maybe relatively quickly. This isn't just wishful thinking. It's based on that built-in demand. We talked about AFX being essential now for earning rewards. It creates this powerful loop: demand, utility value.
Right. So the opportunity isn't just buy the dip. It's more like positioning yourself before the system fully stabilizes and those stronger new mechanics really start driving things.
Exactly right. It's about understanding the vision behind it all. That's what really makes AFX different here. They are deliberately, methodically building a stronger, more transparent, truly decentralized base. They chose a path that boosts security and user control, even knowing it would cause some short-term market noise. That takes guts. This isn't some project just chasing the latest hype. It's positioning for real, sustainable future growth, mainstream adoption. And they're doing it by sticking firmly to core DeFi principles. And what's really telling is how they're actively moving away from centralized app stuff towards pure on-chain smart contract operations. That commitment to real DeFi, that's what separates them from so many others who just talk the talk. It shows they deeply understand what it takes to build something lasting, something trustworthy, something future-proof in this space. This is about real long-term value, not just hype. It's a powerful move, very confident.
Yeah, this whole deep dive really changes the story around AFEX, doesn't it? It becomes clear that what looks like a crisis on the surface, well, through a strategist's eyes, it's actually a very calculated, very deliberate step deeper into what DeFi is supposed to be about. It's this powerful evolution, really, designed to build that long-term value, that transparency, that solid trust in the AFEX ecosystem. It's a bold move, honestly. A lot of projects would probably avoid it because of the short-term pain, but AFEX just leaned right into it.
It really is a strong statement about where they're headed.
Yeah.
They're not just reacting, they're proactively rebuilding to be stronger, more open, and ultimately more valuable down the road. All these changes we discussed, the AFX-only staking, moving transactions on-chain, making people use DXs, giving users more control, these are the building blocks for a project with serious global ambition. They're building for the future right now.
Absolutely. It really speaks to a long-term vision, sets AFEX apart as a project that's truly committed to those core decentralized ideals. So ultimately, what's happening with AFEX right now, it kind of leaves you, our listener, with a choice in how you see it. Do you look at this transformation and see a crisis, a reason to step back? Or do you see it as that golden window we talked about, a strategic moment to engage with a project that's seriously building for a decentralized, maybe even institutionally ready future? That's really the question we'll leave you with today. Think about the strategy we've laid out and form your own view. Thanks for joining us on this deep dive.